Bill, I just wanted to check in with you after the recently concluded investment symposium in Vancouver. You were there.
I was
saw
there.
the speakers.
I was there, yes.
So who was right? Who was wrong? Who was just plain nuts?
Oh boy, that's a loaded gun you've given me there.
Well, I want to elicit an answer here.
Well, I think the thing was, I found myself agreeing with just about everybody, but not necessarily coming to the same conclusion. And I think what I saw is that there's very good evidence, lots of documentation for the credit deleveraging cycle that I think everybody sees. And beyond that, there's a lot of speculation about what that means. I mean, in terms of the government response to it, in terms of investor response. And as you know, the bond market and the dollar rest on confidence. So there's a lot of worry that confidence will give way when they see the federal government continuing to run huge deficits year after year. I personally came to the conclusion that that was probably not a worry for the near term. In fact, I feel myself being much more optimistic than most analysts, and I see ourselves working our way through this in the classic Japanese way, which just happens to be the worst possible way.
Right. Okay. Well, that suggests a kind of lengthy deflation or disinflationary period. Is that what you're looking for?
That's what I see. Now, I told the audience myself that that's all you can see. And that's important to remember. Just because you don't see something doesn't mean it's not coming. And what we've experienced over the last few years is a realization that the unintended consequences of government action are sometimes very sudden and very powerful. So we could see a crisis at any moment. I told the people in the audience that even though I personally do not see a blow-off in the gold market, for example, I would sure want to hold some gold just in case.
Right. Well, a lot of the speakers also seem to want to have it both ways on the question of deflation and inflation.
Yes.
Many of them were saying, yes, I think there's going to be a deflation, so I want to buy Treasuries, but only for 2.5 years, and then there's going to be inflation. Now, you're on record as being relatively anti-Treasuries, as it's a trade of the decade.
It's totally anti-Treasuries.
How does that coincide with your expectation for a deflationary
Well, I'll tell you what,
environment?
this expectation has evolved over the last 6 months. And 6 months ago, if you'd asked me, I would have been more anti-Treasury than I am today. Because now what I see, which I didn't see before, which didn't exist before, was the ability of the world to finance Treasuries over a long period of time. And before we weren't in the Japan situation because we didn't have the savings to finance all those deficits. We're talking about deficits of $1.5 trillion a year over the next 10 years. And anybody would have said a year ago, maybe even 6 months ago, they would have said, well, that's impossible. You can't finance that much. I think I did say that. But now what we're seeing is that there's a huge increase in savings, that the savings, even of the Japanese, are still going to the U.S. Treasury market, and that if we're right generally about the bear market in stocks and the bear market in equities generally, it's going to mean that investors are scared and they're going to look for safety in the safest credit in the world. You know that, I made this point too, that printing press, Bernanke's famous printing press, the technology that he's got, he says that can always guarantee inflation. Well, the thing is, they can't always guarantee inflation. You're not in a credit deleveraging cycle, and that's what we're seeing. They're not getting it. They're getting lower and lower rates. And now they're getting uncomfortably low rates of consumer price inflation, even to the point of absolute deflation, which seems to to me, it'll be here next quarter or quarter afterwards.
Right.
But that printing press thing, it works both ways, because on the one hand, people say, well, I don't want Treasury bonds because I know they've got that printing press and they can just print up dollars at will. But in a fear situation, people say, I want Treasury bonds because I know they can print up dollars at will.
Right. Well, so does that mean that your trade of the decade then is not a trade of the next 5 years? Or should we restart the trade of the decade here in August?
Now, look, a trade of the decade. You stick with it.
Right. You're going to dance with the one you're
Yeah, that's right. You just you go home with the one you came with.
Right.
And besides, it's too early to know.
Yeah.
But I'd say that trade still looks pretty good. You know, I modified that trade, by the way. I said buy Japanese small cap stocks
Right.
and sell Japanese bonds. I changed it from U.S. bonds to Japanese bonds just to get the currency thing out of the way.
Neutralize
the currency problem. And so now I still feel pretty good about that.
All right.